Well, oil prices have fallen after Iran announced it intends to increase output following the lifting of sanctions. Prices had climbed earlier on Tuesday after Saudi Arabia, Russia, Qatar, and Venezuela agreed to maintain output at January levels. Now, that move was seen as an attempt to combat oversupply in the market and shore up the oil price, which has fallen more than 70% since 2014. Well, let's speak now to Ariel Cohen, an expert in international security and energy policy. He joins us now live from Washington. Ariel, thanks so much for joining us. Help us understand first to what extent global power dynamics are playing a role in the price of oil, and who are the winners and who are the losers here?
Well, the challenger right now is Iran, because Iran was off the market because of the sanctions. And for a while, Saudi Arabia stepped in and filled that quota that the Iranians lost. If Saudi Arabia, Russia, Qatar, and Venezuela agree to produce at the levels of January 2016, Iran still needs to come up to speed and bring to the market between 500,000 to 1 million barrels. By that, of course, the market will have more oil and the prices will continue to slide. So at the Atlantic Council, where I work, we are looking at different trends, short-term and long-term. And while the short-term abundance of oil is driving the prices down, in the long term, we have to come with a replacement for all this oil that is being extracted from the ground. And in the long term, I do not believe the prices will remain in the 27 to 35 range. I think we'll go higher. We may get as high as 50 by the year 2020. This is also the prediction of the International Energy Agency. However, for the next 6 months, I think we will remain in the current 28 to 35, 37 range. And it really depends on this dynamic between Saudi, Iran, Russia, and other producers.
Because how bad will it get for those economies, Russia and Saudi Arabia included? Their economies are fully dependent on oil.
Absolutely, and it's pretty bad already. The Russian currency, the ruble, has devalued from 32 to 77 per dollar, more than twice, more than 50%, 60% devaluation. Saudi Arabia has a little bit more reserves, so it can probably last as long as 3 to 5 years. Russia may last maybe 2 years, but the people are suffering. The buying power, the salaries are going down. So it is very tough. So I think it is really silly for Russia to pursue aggressive policies in Ukraine and in Syria and not listen to the international community, not try to find not just a resolution for production of oil, but also for the war in Syria.
Just very quickly, though, will the more expensive North American oil production be able to continue, though, if prices remain this low?
The Americans are now the swing producer, the role Saudi Arabia played in the past, but we are a swing producer only from about $45, $50 a barrel. So we are now having the industry suffering, laying people off, losing money. But if oil prices go up, and again, then the U.S. will be able to produce more shale oil, just as we're producing shale gas.
Okay, well, we'll follow up on your $50 a barrel call and see where you're standing in a few months' time. Thanks so much for joining us, Ariel Cohen.